In this video, I'm going to give you 11 real estate investing strategies to become wealthy. If you're watching this video, I'm going to assume that you're either a beginner real estate investor or you either have 1 or 2 properties under your belt and you're just looking for a different strategy to venture into. With that being said, this video is all about the different types of real estate investing strategies that are out there. And I'm going to be brief on these different types of real estate investing strategies. So if you want a more detailed video, put the name of the strategy in the comments down below this video and I'll be sure to make a dedicated video towards that real estate investing strategy. If you're ready, go ahead and hit that like button for me, turn it blue so other people can see this video and know about the different types of real estate investing strategies that are out there. Again, I'm going to be brief and I'm going to spend about 30 to 45 seconds on each real estate investing strategy. So the first one is house hacking. If you don't know what house hacking is, it's buying a single family duplex, triplex, or fourplex. You're living in one of the units and renting out the rest. So if it's a single family house with 3 bedrooms, you're going to be living in 1 bedroom and renting out the rest. Now, theoretically, you're going to want to live mortgage free. And if you're living in a triplex or fourplex, you're going to be wanting to shoot for living mortgage free and cash flowing a little bit. Now, there is a different way to house hacking, and it really skyrocketed my success. It's where you buy a single family home in a high appreciation market. You live in it for a year to 2, depending on tax purposes, and you sell that property, roll those profits into another property. So for example, the very first property I did this with, I profited $61,000, and that's after the money I put down for a down payment. And on the second property, we're going to be profiting $110,000 just for living in it for 1 year. The biggest perk to doing this is you can buy a property for 3.5 to 5% down, live in the property for a year, and then move. It's the same way with the normal house hacking where you're buying a single family home, renting out the units. You can use an FHA loan to get 3.5 to 5% down, then move out of the property, buy another property under the FHA loan because you refinanced the first one into a conventional loan. Then you're starting the whole process over again. This does apply to duplexes, triplexes, and fourplexes. So again, if you want a dedicated video towards house hacking and possibly my way of house hacking, leave that in the comments down below and comment either HHH for Holloway house hacking or just house hacking. The second way to start investing in real estate is wholesaling. And now what wholesaling is basically getting a property under contract at a discount, and you're going to be flipping that contract to another real estate investor. So let's just say, for example, that you get a property under contract for $50,000 and it's worth $200,000, and you turn around and you find a cash buyer as a real estate investor, and you're selling that contract to them for $70,000. So that difference between what you got it under contract for, which was $50,000, and you're selling it to the real estate investor for $70,000, that difference of $20,000 is your profit. That's just an example, and there's a ton more that goes into it. So if you want a dedicated video towards wholesaling, comment that in the comments down below and just say wholesaling. The third way, and one of the fastest ways to increasing your net worth, is called a value add. And I'm not talking about flipping homes. What I'm talking about is buying multifamily units, 5 units or plus, and you are value adding them. So if you're rehabbing them, and then you're going to be raising the rents, because raising rents on a 5 unit plus a property is increasing the value, because it all depends on the NOI and the cap rate, etc. Because raising rents raises the value of the property. So let's just say, for example, you have 10 units and you want to raise all the rents by $100 a month, therefore creating $1,000 a month in pure cash flow. What this does is it raises the value of the property because it's producing more income. Before I go into the next, if you're wanting to create a life you love with real estate, hit that subscribe button down below and click the bell icon to get notified when I upload a new video just like this one. And if you comment down below whatever strategy you want to learn more about, you're going to want to have those notifications turned on, because I will make that video and you don't want to miss it. Okay, let's move on to the next. So the fourth way is investing in tax liens. Did you know that whenever someone is delinquent on their taxes, that a real estate investor like you and me can go out and buy those taxes, and then the homeowner has to pay you those property taxes. They also have to pay you back interest. So let's just say you go to the courthouse, you buy a tax lien property, you pay someone's back taxes of $1,000. Whenever I'm talking about taxes, I'm meaning property taxes. So let's just say, for example, you bought these delinquent taxes for $1,000 and the owner, the homeowner, decides not to pay you. You can wait whatever time period that is required in your state, your county, to foreclose on them. So imagine spending $1,000 for a piece of property that could potentially be worth $100,000, $200,000, $300,000. If you want more information on that, you know what to do, comment that down below. Now, the fifth way is going to be seller financing. This is one of the easiest ways to get into real estate investing if you don't have any money or very little money. The reason for that is because the seller of the property is acting like the bank. The benefit of this is you're dealing with the seller directly, so you can negotiate terms, negotiate the down payment, etc. So if the property owner is motivated enough, they'll let you inside that property for 0%, and then you can turn around and renting out the tenants, you can flip the property, etc. Another fantastic real estate investing strategy, and this is our 6th one, it's the Burr strategy, and that's buy, rehab, rent, refinance, and repeat. And what this all means is you're buying a piece of property, you're rehabbing it, you're then renting it out, you're cash out refinancing, then you're repeating the process. This is just a way to recycle your money over and over. That way you're not having to build up the capital over and over again. So let me give you an example really quick. You're buying a piece of property for $50,000. And that $50,000 acts as a down payment. And imagine if whenever you go through the whole Burr process, again, if you want to know more about it, comment that down below, comment Burr, and that's BRRRR. I kind of sounded like a pirate there, but again, let me just talk about this for just a second. You put down $50,000 as a down payment. You go through the entire process of a Burr. You're able to use that $50,000 again to buy another piece of property. So this is just recycling your money over and over instead of having to save your money for years and years and years to be able to pay for another piece of property. This is the way to kind of fast track and explode your real estate investing success. There's a lot more that goes into that, so if you want a dedicated video for it, comment that in the comment section down below. Now the next way is if you're looking for a high cash flow type of game. So if you want to be cash flowing, $1,500, $2,000 a month, I highly suggest you go the route of STRs, which is short-term rentals. You probably know them better as Airbnbs. So in a nutshell, this is buying a piece of property, putting on Airbnb or VRBO, and you're renting out this property to tourists. The reason why you can get such a high cash flow is because you can charge a high amount because these people are coming on vacation, they're wanting to go to Disneyland, etc., and they're willing to pay a premium for an experience. Again, there's a lot more that goes into it, but this is the type of real estate investing strategy that is available to you. So if you want a dedicated video on that, comment that in the comments down below this video. The 8th real estate investing strategy is flips, and you probably already know what a flips are, is where you're buying a discounted property, a distressed property that looks like crap, you're fixing it up, you're flipping it, and you're putting on the market for someone to buy. The 9th real estate investing strategy is long-term rentals. Now this is the traditional way of real estate investing. It's where you buy a piece of property, you put a tenant in there, and you're going to be collecting cash flow for years and years and years. Flips and long-term rentals are the two most popular ways to investing in real estate, so I'm assuming that you already know about them. That's kind of why I breezed over them really quick. These next two real estate investing strategies are actually ways to not invest in real estate, but you're kind of like on the sidelines doing it. The 10th real estate investing strategy is a REIT, and it's a real estate investment trust, so REIT. What this is in a nutshell is where companies go out and they buy pieces of real estate, and you can basically fund them, and they act like stocks. You can buy them on Robinhood, you can buy them on Webull, etc. The biggest advantage of doing a REIT rather than actually buying a piece of property yourself is that they're paying you a dividend, and you don't have to actually go out there and buy the piece of property, find the tenants, manage the tenants, do any type of rehab, etc. This is all where you just give a company your money and they're going to be paying you a dividend, and it's pretty handsomely. I think at the time of this recording, Coca-Cola, one of the dividend aristocrats that they are known for their dividends, I think they're paying a 2% dividend right now. With a REIT, you can reasonably expect between a 6 and a 10% dividend yield. Now the 11th way is becoming a hard money lender, and what this is doing is you are lending out money to real estate investors for either flips, short-term loans, etc. As a hard money lender, you're lending out this money and you're getting paid high interest and a lot of fees. Why hard money lending is a great real estate investing strategy is because your money is backed by the property. So whenever you are a hard money lender, you're lending out money to the real estate investor, and if they default on their loan to you, you get to come in and foreclose on the property, you get to take the property back from them. So in a nutshell, if you are lending out money to a property that is a great deal, whenever you lend out the money, they default on it, you can actually take back the property and sell it for a profit. This isn't what the hard money lender really wants. They want to be collecting the fees, the points, the high interest rate, but that is the way to secure your money. If you made it this far in the video, congratulations, because I think this is one of the longer videos on my YouTube channel. I don't know, but I believe it is. Again, if you're curious about any of the real estate investing strategies and you want to learn more about them, comment that in the comments down below, whatever the name of the strategy was, and I'll be sure to make a dedicated video for you. Now, there's a real estate investing strategy that I actually didn't mention. That's foreclosed homes. So if you want to learn more about foreclosed homes, there's a video popping up right here that takes you to it, and I explain it in detail. So go check that out if you're interested. But until next video, I'm out. See ya.